Hi guys, welcome back to the channel. Today we're diving deep into the current state of the US housing market, which is experiencing its worst slump since 1995. Yes, that's right. You heard that right. 1995. So buckle up because we're about to take a journey back in time and into the future of the housing market in America. In December 2023, existing home sales dropped to the lowest level since 1995, with only 4.9 million transactions reported by the National Association of Realtors. This is lower than any month during the global financial crisis. What makes this particularly significant is that the US population has grown by 70 million since 1995, yet the housing activity level has not kept pace. So, what's going on here? In 1995, the US population was around 266 million people. Today, it's over 340 million. Despite this increase, housing activity levels are similar to those nearly 3 decades ago, highlighting the severity of the current housing slump. But it's not just about population. Affordability is another key difference. In 2023, mortgage rates spiked to a 2-decade high of 8%, making it more difficult for new home buyers to enter the market. In contrast, mortgage rates in 1993 averaged roughly 7%, almost 8%, and were trending downwards by 1995. The rise in mortgage rates in 2023 has worsened affordability compared to the mid-1990s. According to data from Bankrate, the main culprit is a lack of housing supply. Inventories remain tight, with the National Association of Realtors December data showing only a 3.2-month supply of housing, where typically there are a 6-month supply of housing. This lack of supply is putting upward pressure on prices across the country. As a result, many millennials are feeling left out. A 2022 survey found that despite being one of the largest group of home buyers, more millennials are opting to be forever renters. In 2018, the share of millennials who said they would always rent and not own a home was 13.3%. That number has grown significantly in a short amount of time, showing millennials are giving up on home ownership. In 2022, nearly 25% of millennials plan to always rent and not buy a home. Unfortunately, this trend is not ending anytime soon. Housing economists point to 5 compelling reasons that a crash is not imminent. Number 1, inventories are still very low. This is basic economics. More people are looking for a limited product. Number 2, there are more buyers than sellers. This is self-explanatory. Number 3, there's a lack of new construction. With higher interest rates, higher costs of labor, and construction materials costing more due to inflation. 4, lending standards are strict, unlike what we saw back in 2008. Buyers now are a lot more qualified than they were back in 2008, where we saw a crash. And last but not least, there are fewer foreclosures. And even if we did see foreclosures, the demand right now is so high, these homes would probably not even hit the market because some investors would more than likely swoop in and buy them all with cash. Guys, if you find value in this video, please subscribe, hit the like button, and share this video as it will help this channel grow and it will also help more people to find this video. Thank you very much. Now back to the video. Well, it's not all doom and gloom. Well, there are some bright spots and an argument to be made in support of renting. So here are 5 of those arguments. 1, you're not in debt for 30 years. You see, when you purchase a home, your money is pretty much locked up for years. And if you take out a mortgage, you incur added debt beyond the purchase price in the form of the mortgage interest you shell out over the years. This means you pay far more than just the purchase price of a home. For example, if you purchase a $380,000 home at an interest rate of 7.5%, you will pay close to $461,000 in interest alone for a 30-year loan, assuming the typical 20% down. Yes, that's right. You read that correctly. $461,000 for the life of that loan. That's just on interest payments, all right? Renting eliminates the need to commit to a long-term mortgage, which typically spans 30 years. This can offer financial flexibility and reduce the burden of a large debt. 2, you have no risk tied to market instability. Mortgage rates go up and down. as do home prices, home inventory, and foreclosure rates. In short, the housing market is affected by multiple variables that are out of your control. Case in point, Florida homeowners did not expect the recent triple whammy of higher property taxes, skyrocketing insurance costs, and the rising HOA fees. And that instability can be volatile to someone with all their money tied up in their home. Renters don't have to worry about this. Renters are not directly affected by housing market instabilities, such as declining property values or housing market crashes, which can impact homeowners significantly. Number 3, you're not depending on the property's value. If you ever idly peruse homes for sale, you can't help but be aware of property value reports. According to a recent report by Realtor.com, home prices are expected to fall in 2024. But however, the report did not say exactly where these price falls are happening. All right, so location, location, location. Reasons number 4, don't have to worry about home maintenance. In addition to the price of purchasing a home and the interest on a loan, renters can ignore costs like roof and window replacement, plumbing and electrical upgrades, and repairs to essential mechanicals like your HVAC system or boiler if you live on the Northeast. Renters are immunized from major repairs since it's the property's owner's responsibility. Other homeowners' costs can include the following: HOA and condo fees and assessments, homeowners insurance, property taxes, private mortgage insurance. When you own your home, you are constantly laying out money. It's possible that your property might not appreciate enough to offset these expenses. And the final reason is that you're not tied down. Renting your home also offers more flexibility than owning, should you need to move at some point. Most rental leases are for 1 to 2 years. You can even break your lease early in certain circumstances or get someone to sublet from you. Renting offers the flexibility to move for job opportunities or personal reasons without the hassle of selling a property, which can be a lengthy and uncertain process. So those were some of the reasons as to why some people opt out for renting as opposed to buying. Now, like everything in life, there are pros and cons to every choices that we make. As of course, renting comes with its own set of negatives. Renters often have limited ability to modify or upgrade their living space, which can impact the quality of life and personalization of the home. In addition, there's no guarantee of cost stability when renting, and you miss out on tax deductibles. A renter will perpetually be paying rent, which will typically increase year over year. Additionally, the mortgage interest deduction is one of the most substantial tax deductions available. Finally, renters miss out on the chance to build equity, a primary way to build generational wealth. So while the housing market is in a slump, it's not necessarily heading for a crash. But that doesn't mean it's easy for new home buyers to enter the market. This is all mean for you, whether you're a homeowner or a potential buyer or just interested in the economy. It is important to understand the factors at play in the housing market. Stay tuned as we continue to explore this topic in future videos. Well, that's it for today, guys. Thank you for watching. Please don't forget to like, comment, and subscribe for more insight into the U.S. housing market. Thank you for watching, and I'll see you soon.